How much does it cost to live in the Villages? Well, you know this Villages costs. I've done what others have done in the past. You've watched many videos that explain their electric bill. This is not that video. This is one in which many of you, this may not apply. If you've got plenty of money from your other house, or you sold your house and your new house is going to cost less and you've got extra cash, this video is not for you. This video is for those who are looking to move to the Villages but don't know if the numbers can work. That's the group I want to help out, if at all possible. Or it's your second home. What exactly are the total expenses? Because you have your other primary home that you're not getting rid of and you want to know what those costs are. But it's not the breakdown of my electric bill, my gas bill. I'm going to cover those things, but really quickly. I'm not going to spend a lot of time. And then we're going to kind of go into if you need to take out a loan or pay a big portion in cash. What are you looking at for the total cost per year that you need to have as income for this property, and how much cash maybe you got to have? Now, there's so many variables with this. Nobody in their right mind is going to make a YouTube video on this. I'm not a financial advisor. I'm not a banker. I'm not a loan of money. I'm doing this totally to just give you some insights that moving to the Villages, as I told my wife, it's not for free. It's not for free. You pay to live there, and people that move there, they get it. They get the lifestyle. They get all the benefits. They understand what it is. It is not the least expensive place to live. It is not the most expensive place to live like some other 55 plus communities that have very, very high HOA fees or others. Villages doesn't have HOA. I know I went into that before. Let's get into it. Let's try to do this. It might be a little choppy because I'm going to go a whole bunch of different directions. First, to look at your expenses, I got to kind of know what your house is. Well, how am I going to do that in this video? I'm going to go out to the internet and pick a house. So I went out to the Villages app, and I've already done this. And I'm going to tell you the first thing you need to know. Now, maybe I just hit it just right. It's early November 2024. Doing this for people that are probably going to move in 2025. I was going to do $250,000 home, $400,000 home, and maybe a $500,000. That all got scrapped. I got on there and under new, not resale, not a house that's been lived in before. I just went new. 2 homes were under $300,000. 2, only 2. Now maybe I hit it in which there's no patio villas for sale, but I hit 2 homes. I said, that's unusual. 3 or 4 years ago, I could see homes under $200,000. I could see a lot of homes in the $200,000 range and $300,000. And it all makes sense because if you look at the statistics of the average home cost in the Villages, they're in the 400s. So how am I going to handle this first major part of coming up with your expenses and how much cash you need to buy a new home? So I went out there and I decided, after looking at, there's only 2 in the 200,000s. There's lots in the 300,000. And I'm figuring if you have money, can afford the $800,000 home, you already know what you're doing. You already either are selling $1 million home up north. You're all set. Let's go with a house that is in Shady Brook for $324,500. Let's start there. We're going to go to this house. It's got 1,476 square feet, 3 bedrooms, 2 baths, 2-car garage. It is your typical village home. It's not your premier, doesn't have a golf cart garage, and it's bigger than a patio villa. It's got patio villas anywhere from about 900 square feet to 1,100 square feet. Some are bigger. Let's go in this category, because if we're looking at the house, we know the price is $324,500. We got that? Next, biggest item is, what is your bond? How much is the bond to that home in Shady Brook? And I'm going to show you how I found this, because I need to make sure you see this. On that home in the Villages, it has a VNH number 222V055. So I went out to the bond schedule for District 15, and I found 222V, which matches with that code. And my bond for that is over $50,000. $50,597.38. And this is the table of what you would pay. This is the amount that you would have added to your taxes each and every year. Annual assessment. It says down in the bottom, your average annual assessment would be $3,462. But if I look at the chart, that's not your average annual, because you have administrative fees, $3,532 per year. And you're going to pay over 30 years $152,000 in interest and $21,700 in administrative fees. Now you can pay it off at any time, but this is a big number. This is a big number. And not all homes have this big a number. They vary. But this house in Shady Brook has got a $50,000 bond. That's what it has. And I want to break that down. So we're going to remember $3,532 that you're going to have added to your tax bill. This is something else I learned, that I can't give you the tax number. I just can't. It was land. They built a house on it. Your first year is a little messed up depending on the time that you buy it and when it was appraised for its value. You get a low tax bill in that first year. When you close on the house stuff, it's going to be great for your closing costs, but reality is going to come. This house is probably in the $5,000 to $6,000 in taxes. And I'm estimating, I'm just making a guess based on the taxation. Each county has a separate tax rate. So depending where you buy the house and in which county, the tax rate can be different. There's also a CCD, I'm going to call it a charge plus a fire department charge, that can run you about $800 on top of that. Now we've got our numbers. So I need to plug in some numbers, because I need to figure out, what is your cost already built in before you move in, power up the electricity, all of that stuff. Let's just run these numbers, and here they come. Okay, so let's go to a spreadsheet that I made to deal with this cash you got to have available. You got to be thinking about cash. How much cash do you have? So I'm going to summarize it on this home of $324,500 with the $50,000 bond. My numbers, do not take them home to the bank and say, this is what you watch this video and that's what you got to have. Every home's going to be a little different. Interest rate's going to change. I might have missed the mark on your property tax. Could be $1,000 higher. I'm not sure. Depends what county you live in. But you get this. You can make this for yourself. So here's my simple chart I'm going to run through. If you're going to pay 100% of the money, you have it in cash at closing, you're going to have $324,500. I'm guessing you're going to have some extra cash for closing, because you're probably, if you're doing it in cash, you're not using a bank, title insurance, all those things, you're probably still going to spend $2,000, $3,000. So I threw in another two. So you better have $326,500. Your bond, if you want to pay that right off, don't want to have any kind of interest rate, taxable, administrative fee, you don't want to pay anybody anything extra, add another $50,000 on it. To buy this home, not have a mortgage, you're looking at $377,000 approximately that you need going into buying this house. There's a lot of people that do that. There's a lot of people that say, I'll do everything but the bond. Now let's talk about the bond. The bond for this $50,000, $597,000 bond is going to cost you $3,532 per year. So if you pay cash, you don't have $3,500 every year taxed onto your tax bill. It's a choice. This is the choice. Now, you can pay off the bond in any given year. You don't get the benefits, not a monthly mortgage. You don't get months, it's annual. You got to pay by a certain time and you get it off. But you're in that chart. You're paying a lot of interest up front and less later on. So if you think you're going to do it later on, you're not going to have the big benefit. But the bond choice you got to make up front. Now, plenty of people move a lot of times. They say, don't do this because you're probably going to move a second or third time. You picked the wrong house, wrong neighborhood. Those are all choices. But I give you the big number. So I also did just for chart purposes, you decide to pay half for the house and borrow half. Well, you're looking at between closing costs, the cash down. For this house, you need about $168,750 available, ready to go at the closing. Closing's usually at 30 days. If you do a typical mortgage with 20% down, you're looking at borrowing $259,600. I just went with 6%. You're looking at the payment of $1,558.83. Not escrows, nothing else, just the finance portion per month. If you did the half routine, you cut that number to $974. This is with 6% interest rates, not 3%, it's with 6%. I use Citizens First calculator because a lot of people would borrow and have their lender be Citizen First, who's part of the Villages and does a lot of these, and you can do it relatively quick. The next row I did, which is going to come into play into my spreadsheet on your expenses monthly, but we got to figure out those yearly expenses. Property tax, I'm guessing on this house is $5,500, maybe $6,000. You do have a fire department and CCD fee. Usually it's about $850, maybe up to $1,000 in the future. Your annual bond cost that we just mentioned. So you're looking at, I'm just guessing on this house, guessing, not an exact, you're coming up with yearly expenses on that tax bill of $9,882. If you keep that bond in there, you're going to pay annually on the bond with that fixed amount. You're looking at almost $10,000. And I say this comes into play because people don't usually run through this portion first. A lot of people just go, I'll sell my house, buy a new house, and I'm not looking at the expenses. Well, here's just a snapshot of what you might see for expenses. You have all those decisions, how much money you're bringing to the table, and then you have your yearly expenses, and we'll play into that in my expense chart. So let's go to the expense chart. Okay, we're gone to my personal budget retirement age. I'm not talking income. this helps you figure out you better have the income to do it. So I'm going to fly through this. Here we go. Homeowners insurance. I'm plugging in $150 per month. On a new home, insurance rates are low. I'm guessing $1,800. Electricity. Electricity has gone up. It's been inexpensive, but 3 bedrooms, 2 baths. I'm anticipating $150. Gas. A lot of places have natural gas. So I threw in $45. Your electric bill may be higher if you're all electric. Water, sewer, trash, those are all on your village's bill that comes. They combine all those items. I got $50, $28, $23. We can argue about any one of these, but I'm just giving you the rough numbers. The amenity fee is $195. It'll be $195. It's going to change. It'll be $200 next year. On the home opening date is when it's set, and what year you're in. You're probably going to be around $200, but I'm leaving it at $195. Phone bills, internet. I'm going to tell you a little bit here. The phone, that's really up to you whether to include it. I included it because this budget is trying to help you know how much money you need. So I'm leaving it at $100. You can do things less than $100. I can tell you there are prepaid unlimited plans for under $400 a year. So $100 is a lot. That's, you're staying on Verizon, say, and you're still paying the bigger amount. Cable satellite. This is whether you want to pay for cable TV or get a separate service. This may be low, $45, or whether you just subscribe to some internet kind of services. Maybe you subscribe to YouTube or Hulu or one of those, and that's what you do. So it may be high or low. Internet. I used to have a low number in here, and the low number was when you move to the villages, they offer you terrific deals. I'll give you internet for $49. I can tell you 3 years later, you're into the $80, $90. It's kind of a lost leader to get you in that, I thought it was going to be cheap. I thought it was great. It is better than the Northeast. In the Northeast, you're at $130 to have high-speed internet. I put in $90. Property taxes and bond. This is the number we want to kind of switch up. This was all of those items we just did in the last chart. So let's take another look at that chart. I had $9,882 per year. $825 would get me at $9,900. Lawn, garden, and pest control. You can get your lawn mowed for $65 a month, but your pest control is going to cost you, $125 every couple of months. You're going to be looking at, you need about $1,500, maybe $2,000. Let's up that to $150. If you throw in your termite protection every year, you got to throw that in there. I'm not doing your taxes. I'm not doing any of that stuff. I think when it comes to auto insurance and payments and stuff, I don't know if you want me to include this. I think what I'm going to do is I'm going to remove this for now. I am going to leave the living expenses and groceries. I'm leaving out car payments, whatever. You've got to fill that in. You've got to take note of that. But I guess what I want to do is some of these hard home expenses. It's $22,000 a year. So $1,851 per month before groceries and all that and some of your other. Daily living. You may agree with these, you may totally disagree, but I thought it would be fun to plug in. Groceries cost a lot. Maybe you don't spend $800 a month on groceries, but it seems like every time I go to the grocery store, it's $200 every week. That quickly, easily turns into $800. $500 dining out, what's that, 10 times in a month, maybe? $50 each, that's Yeah, that's not, maybe that's too much. But when you look at it, your hard costs are $18,000. My soft costs of enjoying life, getting my hair cut and all those kind of things that I plugged in here, $17,400. Now I do have an entertainment of like $365. If I want to go to a concert, play sports, do whatever, another $4,000 that I've added up. You can totally disagree with just my rough numbers. Health insurance is one that most people don't want to talk about. In your retirement age, you're either picking a plan that costs you money, or you're picking a plan that doesn't cost you anything, but it costs you out of pocket. And so my guess is you need to have available either to pay the premium or out of pocket at least $9,000, plus you got dentists and prescriptions. My number comes out to $10,800. Now these are not my personal numbers, these are just estimates based on Plan G and out-of-pocket costs and something I ran a couple of years ago. So all in, let's take a look at this. You need an income per month to have this home. Forget the bucket of cash or whatever. Oh, we didn't do that. Let's go up to mortgage and rent. You need, if you paid cash, $4,600 a month, which equates to $55,000 a year to own this home in the Villages. I didn't do taxes. The auditors or the financial plans will say, hey, you got to pay taxes. You got to have more than that. I also eliminated your car. But let's plug in, you decided to pay half based on my numbers previously. So let's enter that number. I think I got that number right. So you've put half cash down for the house. You've had enough money to cover those other closing costs and those things. And this is your mortgage that you've added. All it matters is it's added for the whole year. Another $11,700 you need in income. So now you're into, you need $66,483. You need $66,483. That really jumped your number. And you're only going to put 20% down. Let's see what that does on an annual basis when you plug that in. That alone is adding $18,705. And we've jumped now. You need $73,497. $73,500. And my numbers are not exact, but you kind of get it here. You go all the way from $74,000 depending on how you finance the house. You can drop all the way down to $54,000. That tells me cash is king, as we all know. So if you have cash, you can really lower your monthly and annual costs to live there. Those cash numbers I talked to you about, put aside another $14,000 for the golf cart. At least $14,000. You need a golf cart. So if we go back to that cash, money on hand, you're buying everything. If you add the golf cart, you're at $340,500. But if it's a second home and you're trying to squeak it around, look at all these numbers. Now, if you're renting it, you don't care about groceries and all that. People are going to feed themselves and do all of that. The hard cost is what matters. But I'm sure I didn't cover if you decide to do sinkhole insurance or flood insurance or some of those things, if they're required on that property. Those are things that you got to look at. I hope you enjoyed this kind of going back and forth and looking at the real pocketbook issues. I think people, I struggle at whether I should make this because it shows that you've got to be having a good retirement income. Hopefully you've got a pension and a good Social Security amount that you can get that kind of money to make it work. I think your monthly costs go way down if you've purchased the house in cash. This is what this shows. I hope it was helpful. This is way more detailed than most, and it also not as detailed as most want to get into. I'm not getting into your electric bill's $135 or whatever. I'm not getting into what you buy at Home Depot or home improvements you decide to make or furniture purchases. Hope you like this video. I'm sorry if this was a bad video for you or it was enlightening, but like and subscribe. It helps me out. At least do that. If you really, really appreciate it, buy me a cup of coffee. Buy me a cup of coffee. Say, Gary, this is what I was looking for. You deserve a cup of coffee for putting all this together. Most of us know this, but sometimes when you look at it, you go, wow, how much money do I have and can I do this? This will help make those choices. Thanks for watching. See you on the next one.